Hi everyone, my name is Kunal Doshi. How are you all doing? I hope you all are safe. This video, yes, you have read it right. This video is all about the curriculum changes that Institute has come up for 2022 attendees. So all those who are going to attempt in 2022, you'll find some changes as usual, which you'd normally expect from the Institute in the CFA curriculum. So in 2020 and 2021, if you remember, there were not substantial changes because of the pandemic. The exams were not conducted in many parts of the world. And also because of the huge structural change that we have seen where the exam have now become computer based. So the exam format and the exam pattern has also changed quite for all the levels. And due to this, there were no curriculum changes as it is expected generally from the institute. Now, are there substantial changes in this year? Well, let's see that. So, what are the changes? Well, as per the institute, they have dropped 2 readings from level 1 and they've added 4 readings. Which are these readings? Well, the first reading that they've dropped is from QM, which was reading number 7, and that was Statistical Concepts. So that Statistical Concepts and Market Readings is the reading that they have dropped from the QM part. Instead of that, they've added 2 readings in QM. The one is organizing and visualizing of data, and the second is linear regression. Yes, you've heard it right, linear regression. This is a new reading for level 1, although it is present in level 2. So it's the exact same thing that you will find now in level 1 as well. So this linear regression, they've started introducing that from level 1 itself, instead of directly seeing that in level 2. However, if I again reiterate, they have removed reading 7 from the current reading, that is Statistical Concepts and Market Returns, and they've added this organizing and visualizing of data. Also remember that the readings have changed. Why have the readings changed? I'll discuss about that as well. But as per me, there is not a substantial change in statistical concepts and now organizing and visualizing of data, because you have the same things in those readings. You have frequency distributions, you have kurtosis, skewness, and the same discussion of correlation and covariance and all that you already had before, and now it's the same thing. So I believe that there's not a substantial change except some cosmetic change. There's not a substantial change in the reading, it's just a change in the name, right? So one thing that the institute has said that they have dropped it, I don't believe they have dropped it. They have just renamed, or some minor changes is what they have done with respect to reading 7 currently. So statistical concepts, you can now assume that it is the similar reading, but now the name has changed to organizing and visualizing data. However, yes, linear regression is added to the new QM, correct? That is first change. The second big change is that in the ethics. In ethics, they have dropped the Global Investment Performance Standard, GIPS. Yes, it's a very good news for many students because there was too much to read and too little was asked. I remember my days when I was doing level 1. I honestly, now I can say it very straightforward. I did not study GIPS. I did not had time, and I did not even look at that. Although that's not a thing that I would recommend. But the good news is that GIPS is dropped. And instead of that, Institute has added a new reading in ethics, and that is ethics application. Ethics application will be now reading number 60 in the new curriculum, whereas GIPS and all other readings were there in the first part or in the first study session. Now, why has the reading number so much changed? But before that, let me just complete that. GIPS is dropped and ethics application is added, which is a good news, which is a more practical thing. But why is the reading shuffled? Well, the biggest shuffle is that ethics, which was first study session, is now put to the last. So you'll see all the reading numbers being changed. Now we expect that that normally does happen, but now the entire first study session is moved to the last. So ethics is now in the reading 55 and 60 and so on, that part. Is it a good thing? Yes, it's a very good thing, because normally when the beginners, the first timers who see CFA books, they start with the first book and they start with ethics. But as professors, we don't recommend students to start directly with ethics. We recommend ethics to be done at later part when you are done with major parts of your syllabus. So that's what we also recommend. So it's good that they have kept ethics at the later part. So that's a good structural change, I should say. The second thing apart from this that we've discussed, that there are changes in QM, one reading is dropped and two added, or one of that is renamed. In ethics, one reading is dropped, GIPS is dropped, and application of ethics is being added. The third thing I should say is that there is the reading which has been added is behavioral biases. Now, behavioral biases, you have currently that as one of the LOS in equity investment, but now an entire reading is added in the portfolio section, not in the equity. That is very surprising. In the portfolio section, they've added behavioral biases. Now, behavioral biases is also present in the other levels. In level 3, you will have a prominent section on behavioral bias. Now, they have introduced that behavioral bias in level 1. The surprising part is that already in level 1, you have some of the behavioral bias in equity investment, but now you have an entire reading also along with that. So they've not removed that from equity, but they've added an entire reading on behavioral bias in level 1. And that is, I think, reading number 52. That's a part of portfolio. Now, what is a disappointing thing here, that the portfolio, which now has around 5 to 8% weight, has too much of things to be read. Well, you had the 4 readings of portfolio, right? The risk return and all those parts. But then there were risk management, there was fintech, there was technical analysis, and now behavior bias. So I think there is too much to ask from the students, or too much to read for 5 to 8%. Now compare that to derivatives and alternatives, where you have hardly 1 or 2 readings. So I think, the efforts required are too much compared to the weights. So I'm not a bit happy with this part. Of course, it's not that institute decides on the basis of what I feel, but I feel as a student, the portfolio part will become a lot bulkier. So that's a bit of negative part. Why? I don't know why are they continuously increasing portfolio. Well, technical analysis was first part of QM. Now they added to portfolio. Behavioral bias also in the portfolio. Fintech also in the portfolio. So portfolio, there is too much of things to read in the portfolio for a meager 5 to 8%, right? Of course, you will have to do that. So that's a change. Now, I have read in some of the articles where it has been mentioned on some of the website that corporate finance is changed. Now, let me tell you that if you see the readings carefully, you would not find capital budgeting and working capital, which was there initially as reading 32 and 35. Now, that has been replaced by sources of capital and uses of capital. So, of course, there are a lot of LOS changes also in that, but now you would not find capital budgeting and working capital, but instead of that, you'll find uses of capital and sources of capital. Now, let me tell you, capital budgeting is nothing but uses of capital, right? So you'd also find that NPV and IRR techniques again there in uses of capital. Now, in sources of capital, the discussion generally, even when we start corporate finance, we start with where do you get the capital from, and then you find the cost of capital. So honestly, we never started with the flow of the institute. We always start with the flow of cost of capital, then leverage, then capital budgeting, then working capital management, and then finally we may go to corporate governance and so on, right? So again, here, what is the changes that they've done? That if you would see the readings, you may not find reading 32 and 35. You may not find capital budgeting, and you may not find working capital management. But that does not mean that these readings are out. They are rearranged, and some of the new things are added there. But that is in the form of uses of capital, which is reading 28 now, and sources of capital, which will be reading 29. One very positive thing that which I'm perhaps very much happy about it, that initially there was no mention of Modi Gilani Miller. How can you perhaps discuss about capital budgeting and not have Modi Gilani Miller discussion there? When Modi Gilani Miller were known for capital structure irrelevance theory, so now you will find Modi Gilani Miller discussion in the new curriculum as well, which I'm expecting in the sources of capital part, right? So that's one good change. And are there any other changes? Well, there are no further changes. As I said, 2 new readings in QM. Technically, one of them is replaced, but 2 new readings in QM compared to 1 reading being dropped. 1 reading dropped from ethics, GIPS, and ethics application being added. And in corporate finance, capital budgeting and working capital, technically not out, but that is being changed to sources of capital and uses of capital. So these are the changes that you will see. One more change that you will see in the revised curriculum is the addition of capital structure in corporate finance. So now you have overall 3 readings in corporate finance, which may have a new name, that is uses of capital, sources of capital, and capital structure. So you'll have 28, 29, and I think 31 will be capital structure. So that's a very good restructuring of corporate finance. Initially, corporate finance did not had a lot of discussion on capital structure, or as I said, theory. Now that you will find in capital structure topic as well. So 3 new names you will see in corporate finance: sources, uses of capital, and capital structure. So don't assume that things are out, but they are well placed now in corporate finance, right? So I should say that by the name, if you would see, 4 readings are out and 7 new readings have been added. That's what you will see by name. But only if you go in the details of LOS, you will find that more or less in QM, apart from linear regression, it's the same thing. In ethics, it's a new thing. In corporate finance, it's more of a reshuffle and addition both. So that is the change that you would see. Now, what is my view on this? First of all, let me tell you where there are absolutely no changes. So there are no changes in FRA, there are no changes in equity, there are no changes in alternative, no changes in derivatives, no changes in fixed income, and no changes in economics. So out of your 10 subjects, 6 subjects, there are absolutely no changes. They still remain status quo, right? Now, I feel there are some positives here because now it has been well organized. That is the first positive thing that I feel with the new curriculum, that it is now the corporate finance, as I said, is more organized. The second thing I feel that in ethics, removing GIPS and adding ethics application is a much welcome decision, I should say, not only from the student perspective, but from the, from the realistic perspective. We would want more of ethics application rather than just reading the numbers of GIPS, right? The third point I would like to make here, which is my belief, is that as I said in the past also, that the addition of or the recognition of model in capital structure is a very good thing, right? The fourth thing, that adding of linear regression is a very good thing. Why? Because you directly seeing that in level 2 is a nightmare for many students. So having that part in level 1 makes level 1 more stronger, and more easier it will be for level 2. And yes, the last positive that I feel is putting ethics at the last. So that change was mandatory. No doubt the reading numbers will change, but that was very much required, so that people don't start from ethics. So I have a lot of students who, before coming to me, they have already read ethics and they have not understood it. And many get disappointed that, is this what CFA is? So then we generally say that ethics is better to be read after you read topics like portfolio or equity and so on. So you would understand, or even alternatives and derivatives. So you would understand how things work there. So then it will be more relatable. So it's a good thing that ethics is being put at the last. What are the negatives here? Well, I've already discussed. I am not, I am disappointed with the way the portfolio is being burdened so much. And also many spaces, the flow of topic is still not arranged where you expect the flow of topic by the institute to be done better. So in many cases, the flow of topic is an issue. And especially, I said, portfolio is unnecessarily increased too much. That's one negative that I would like to do. There are a few wish lists that I would want CFA Institute, this is my view, and I'm sure many of you all may add to this, that, which I expected CFA Institute to come up with. Well, they need to put more things on fintechs and startups. Having just one LOS or one reading is, I don't think so, is sufficient. Of course, it's a good beginning to have fintechs and startups, but more could be done by the institute in this line. That is first. Second, you see CFA Institute promoting and discussing a lot of things on ESG. There's a entire euphoria going on ESG. So it's just a small mention of ESG in the corporate finance topic. I would rather be happier to see an entire reading dedicated to ESG and how ESG is being factored into valuation. So in valuation, we should get some part of ESG, some part of factoring of ESG in level 1 also. That is what my second wish list is. The third wish list is that, why is the CFA Institute not discussing about gold and crude when these are global assets and there's so much of discussion on gold and crude everywhere. So not only CFA Institute, I've seen many institutes not discussing about gold and crude. Well, they are very essential commodities, and especially a lot of people want to know why the crude prices went negative, why the gold prices are shooting up. So some sort of a discussion on gold and crude would be a very important thing. They have discussed commodity derivatives, but I think based on this, some introduction of that would be a great thing in level 1. It would be a complete picture. The fourth thing that more and more discussion should be at least one reading they could allocate on cryptocurrencies, based on the euphoria that right now people have for bitcoins and ethereum and so on. I think some of the discussion should be some more discussion should be on bitcoins. Even in the fintech they could have added more about bitcoins and what is bitcoins, and some easy explanation rather than having a more technical explanation. Some easy explanation on bitcoins is expected or can be expected, right? And then I also expect pension funds and sovereign wealth fund discussion there. This is my wish list. So if the institute can add more things about pension funds and sovereign wealth funds, especially pension funds, because then when you go in level 2 and when you see FRA, the pension funds and the topic of pension fund there is a nightmare for many students. So why not have some introduction of that, like you had with linear regression? Why not have some some introduction of pension funds also in level 1? That would be a great thing. And finally, this is my personal wish list, maybe in the future, that institutes should include some geopolitical aspect in maybe in macroeconomics or somewhere in the other discussions about how global politics does shape the financial markets, how they affect the financial markets. So that would be a great thing. So fintechs, cryptocurrencies, discussion on startups, gold, crude, bitcoins, pension funds, sovereign wealth funds, and geopolitics. Too much to ask from the institute, but they can perhaps pick up some of the things. I was hoping that thing to happen, especially after the changes happening after 2 years. But of course, there's probably they must be having too much things on the plate. So these are the things that they may come up in the future in the form of changes. Okay. Let me know how did you find this video, and if you find this video informative, do share it with your friends who are planning to do CFA or who are currently doing CFA, and let me know your suggestions or your feedbacks in the comment section below. Thank you and have a great day. Bye-bye.